Hello Market Club members and traders everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Yes, we've come to the end of the week. It's 8/8/14. Lots going on in the world. We talked about it in our comments today about the Ukraine, about Hamas and Israel, but the biggest news to me has got to be the theft of 1.2 billion passwords. It's huge. And guess who did it? Russia. And I'm sure that this is part of their plan for cyber warfare with not just the US, but also with the rest of the world and Europe. So let's take a look at what's going on in the marketplace. This is the Dow. We're going back to the trend line, but I put a couple of other indicators in here that I think you want to look at. And that is we've got the 100 and 200-day moving average in here. This is the 200-day moving average, which is right here. It's hard to see it, but there's the line right there. And you can see it really just is right there, right on the money. So the market's oversold, just as it was here and here. The interesting thing is we've had a monthly trade triangle really hit on the lows, which is pretty unusual. Every time we've gotten down there, the market's actually rallied. So I think we're at a point now where you could potentially see a rally. The key thing here in my mind is to watch where the parabolic comes in. If the parabolic gets hit, just like it was here and here, maybe time for shares to start going back up, or at least the Dow to go back up. A little bit different story with some of the other indices, but let's move on. S&P doesn't look quite so bad. It does form a trading range with a minus 60, but the trend still continues to be up. It's still above, just above the 100-day and the 200-day moving average, so that's important. Plus, you're oversold like we are here and here. A little bit better picture on the NASDAQ. We've had some good performing stocks there. We've just moved below the 50 line, which is not necessarily a good sign. Again, it's a minus 60 trading range, but again, we're way above the 100 and 200-day moving average, and I think we'll see this market do better. Let's look at the stocks we've been talking about all week. Moving on to, this is Apple. Apple isn't performing particularly well today. It's actually below the 50 line, which is not a good sign in my opinion. And I think we sort of hit a temporary top here around about the 100 level, which is, if you remember, previously that 700 was the old high, but they had a split 7 for 1, so 100 would be the old high, so to speak. And if you put this into candlestick terms, the market really hasn't performed well at all for the last week or two. So moving on to our next market, Tesla. Tesla, on the other hand, has done very, very well. Even though we're down today, it has done well. Let me close that into a smaller chart. You can see we've moved up. A little bit discouraging for the week, the way this market's closing, well, the way it is right now. It may not close this way, but if you look at a weekly chart on Tesla, there it is. We are potentially, the previous all-time high close on a weekly was, the all-time high close on Tesla was 246.21. We're currently 247, so we're just above that level. Certainly, if we can see a new high close for the week, that would be a very positive sign in my mind. But Tesla looks very positive with all trade triangles green. Netflix looks like you've had a doji line on the weeklies. This is a good close for Netflix. If it closes up here, look for this market to do better next week. Again, potentially to turn this weekly red into a green. And that should occur if we see this market go over the 457.38 level. So that's something to watch next week. Amazon, we have a harami inside, which means this week we've traded exactly inside the previous week, meaning there could be a trend change coming up in this market very, very soon. Again, we're a minus 60 trading range. The monthly trade triangle is still positive. The 100-day moving average is still intact, and the 200-day moving average is still intact. So that to us looks like it continually could do better. This is gold. Gold actually is higher for the week. If gold were to close here, this would be its best close in about a month. And it looks like it's trying to move higher. We just moved over the weeklies, over the 50 line. If we go to a daily chart, you can see we've just moved over the 50 line for the first time in quite some time. And that indicates that the momentum is on the upside. Still looking for this market to do better until the middle of September. We've moved to a plus 75, indicating that the momentum's starting to build up. And next week, I would say, if we see this market go over today's high of $1,322, this market should start off on a very strong note. So middle of September, we're looking for this market to do very well until that period of time. So let's see how that plays out. Hey, I'm Adam Hewison. We've covered a lot of ground today. Have a great weekend, everyone. We'll see you next week.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.